We're never going to be the biggest. I don't want to be. I just want to be the best for the right fit brokers and originators that fit our model. And it's amazing when you find that fit, how loyal we are to them and they are to us. And that's, in a sense, that's Windsor's business plan.
Welcome to Powerhouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of Housing Wire. My guest today is Chris Vinson, CEO of Windsor Mortgage, a division of Plains Commerce Bank. Chris, it's so great to have you on the show.
Yeah, thanks for having me. I'm honored.
Yeah, it's really exciting to have you on the show. For those in my audience who don't know you or Windsor Mortgage, could you briefly introduce yourself?
Yeah, I mean, I started off as a mortgage broker in the year 2000. Weird enough, I actually sold to a bank in 2008 and really just had one big goal, was to figure out how to get number one in market share. Got that market share in 12. And then in 16, really started to work community banks throughout the Midwest. And that was, like, in a sense, the birth of Windsor. Windsor was never going to be Windsor. In fact, our demographic was a 45 to 55-year-old male that wore a suit every day. And so the Windsor originally was the tie knot of connecting us with community banks. However, as things change and you start one thing and you thinking you're going one direction, and then you're like, wait, we're going to go another. I get a call. And I get a call from Fannie, and Fannie's like, we know this wholesale group. They're actually making a shift and change. Would you be interested in adding that to your arsenal of Windsor? And what really happened with Windsor is that a lot of community banks in my market used us, and they would say, we use Plains Commerce Bank. Well, the consumer was like, well, we're paying two people. We shouldn't pay two people for this product. And they weren't. But in their minds, they were. And we're like, we're going to have to rebrand this channel differently. So in a sense, Windsor is really a product name. Our licensing and everything houses underneath our federally chartered bank, which is Plains Commerce Bank. So in a sense, that's like how that whole thing transcribed of day one in 2008, which I didn't have a crystal ball. I'm not super smart. But in 2008, they purchased us because I didn't have enough. And maybe this is a challenge to maybe some that's listening, but I didn't have enough warehouse lines as a small broker. And warehouse lines in 2008 were harder than they are today. And I was looking for additional partners. And I ended up with a company that wanted to purchase and partner at the same time. And so off we went. Been here ever since. And then in 2000, we really got serious in wholesale. COVID hit. And here we are, the beginning of 2025.
So what is being under that Plains Commerce Bank umbrella done for you and your mortgage team?
Well, I mean, just like everything, I think there's positives and negatives. The positives are we're a nationally chartered, licensed in all states. We have, a different set of regulators, so they maybe view things a titch differently, good and bad, or I should say harder in some areas and easier than others, if that even would make sense. But I don't know if it really truly matters. I would say the negative is that, we're capped on the total dollar of servicing tied to our capital. So it's a negative as a community bank. It's something that we're passionate about figuring out why to change. I get that they didn't want to use depositor money to build a servicing portfolio. So I totally get that philosophy, but what if and how could we set this structure up differently? That would be a big challenge that a smaller community bank like us would have over, say, another mortgage company or some that are my biggest competitors, which wouldn't have that as a requirement.
Your primary focus at Windsor is on the wholesale channel. What is the size of your account executive team, and do you have a geographic focus with your business?
Yeah, I would say, what our biggest, that's a great question. Of course, we're in all of the states. Florida, Texas, the Midwest is, we're really strong into those states. We're a small company. We're a boutique mortgage company. We pride ourselves in, when you call into us, you're going to actually talk to somebody. So we run about 21 AEs, and so we don't have 100 AEs. We work hard every day, and we're not like the perfect fit for everyone because we don't do non-QM. We do primarily, your conforming agency, jumbo, and then state bond programs are our real focus. And it's because we feel like a loan officer needs a full toolbox, and our way of doing business doesn't obviously fit some of the non-QM products. So we've just never really got into that game. So our customer is a conforming agency, government type products is most of their fit. That's our perfect customer. I mean, we have the big guys, we have the small guys. So like, we don't really concentrate on the size of the mortgage company, but we see that we do really well when we get a really good originator that's out there proactively generating leads. So we work really well with a loan officer that's generating self leads, and we work really well with an originator that has a team as well, so that we can integrate with that team to be able to help that originator do more loans.
Now, the wholesale channel is dominated by United Wholesale Mortgage and Rocket. What is your strategy for competing against these two juggernauts and kind of carving out your own slice of the market?
If I only knew how big they were when I started, but I think I tell everybody we're a perfect fit, and there's a room for both. If you think about how you shop, would you choose this place over this place? And there might be saying, well, I would choose both. I mean, in this situation, I would go here, and in this situation, I would go here. I think that's true for the originator. Like my main focus is helping originators be better. So we do a lot of coaching. We offer a lot of tactical things that they can go out and generate more business. So our philosophy is that look, if you want to learn how to get better and to generate more, we'll help you. And in lieu, you help us.
Yeah.
That's really been our philosophy. Am I going to win in this particular area or this particular area? Maybe not, but I feel like we do win helping an originator generate more leads, more closings, figure out how to hire, how to do metrics, like all of these topics, run a P&L, all of these major topics that originators are working on today. They're like, where do I go? Do I hire a coach? That's why I started Battle of the Coaches, because I wanted the originator to understand that not one coach is the same. And there's times in life where you need this coach or you need this coach, and to understand, because it was a coach that kind of changed my life, but understanding that. So our originators and our A's, we always tell everybody, look, our A's aren't telemarketers. They're not calling you unless they have a purpose. And our purpose is to grow in the relationship and to be able to help them succeed. It's tough out there right now. And so being able to run scenarios, have our live Zoom rooms, being able to talk to our underwriter are all unique things that I think Windsor offers to the broker community that maybe some of our competition doesn't.
Yeah, I mean, if you think about the variables that people are competing on in wholesale, it's tech, it's speed to close, it's rate, obviously, but there's also the service and education component. It sounds like that's where you're really trying to win mind share.
I mean, yeah, everybody wants to be competitive, and you got to be in the game. And we always tell everybody, hey, look, if I'm within a quarter, would you choose me? And I feel like that's like that spot. If I'm 100 basis points out, I wouldn't expect them to choose me. Because how am I going to offset that value? Maybe I've put that into my head, but I think that's probably more reality. And at the same thing is, how do I stay in front? So my last word for the last year was stickiness. And how do we become sticky? And so creating warehouse lines, because we're a bank, that's definitely a benefit. So we have a warehouse division that we've created, and we have some unique advantages for that warehouse line. It was not having a warehouse line that got me to Plains Commerce Bank, which then got me purchased. And so I understand for a mortgage company to have the proper warehouse lines, have the proper mix, not just have one, and understanding that is super important. But then also we've created a executive banking suite for mortgage companies to bank. So a bank that understands mortgage companies and understands what costs them the most in their bank statement. Most mortgage companies don't dive into the statement enough to understand the fees. So an average company, if I save them $4,000 or $5,000 a month in just fee stuff, mainly incoming and outgoing wires, then I'm putting money right to the bottom line. So we're always looking for it. Yeah, I think we get asked all the time, what makes Windsor unique? We're looking for your problems and we're figuring out a solution. And if we did that, we feel like then we've earned the right to ask for the business.
Yeah. Yeah, that makes a lot of sense. I was going through your LinkedIn feed prior to this conversation, and you actually had, some frequent posts about your tech stack. And so maybe talk a little bit about what your tech stack consists of right now and how you're maybe trying to differentiate yourself a little bit on the tech side.
Well, yeah, I think the big challenge on the tech side is that what LOS is the originator or broker using. And it's really gotten to a smaller pool, which is nice. Arrive, Lending Pad, these two great companies, and us partnering and being able to figure out how do you make it easier for us to connect in. So, I guess you could call us old school or stubborn to change. We're still with Encompass because the back end side of Encompass is so good in connecting through all of our back channels and bank side. It's how do we make the front side better? So our utilization through third party and Salesforce, our utilization and new partnership with Arrive, even Arrive now has got it set up to where not only could they start the application, lock the loan, and now send us the initial steps up front without ever having to leave Arrive. So like the technologies, I would say, has really become even a more of a level playing field, but we're working on all of our new technologies with the ICD so the broker can originate that. That'll be next month. So the broker can have that ICD done at approval. They can have everything set up, and then boom, as soon as we're ready to go, it's already done. So each and SnapDocs and integrating that piece to where we can eliminate 30 to 40 minutes from a closing because all the preliminary forms are getting signed up front. We're coming in, we're signing 6 or 7 forms, and then we're out. So problem is an originator that wants to go to closings and it starts to get busy. They can only go to so many a day and then stay on the front side of helping all of those other customers. That becomes a challenge to a top originator. To an originator doing 1 to 2 loans, it's not that big of a challenge, but to an originator doing 30 loans becomes a big challenge. And so SnapDocs is someone that we've really partnered with. We believe in what they're doing, and they're just really changing that whole closing experience for the borrower. So we spent 2 hours today actually working through our tech stack. What's next? What next? How fast can we get the file index? How fast can we get an underwriting? How do we reduce underwriting error? How do we be able to give a good condition list? Because we don't want to send and do an LPDU underwrite, which means you read DU, you LP, you send it out, you say your loan's approved. Because most originators don't dive into the D or the LP report. So I'm going to give you 40, 50 conditions. Or what if I did all the work and got you 12? And then got you organized so that you could stay on the front, or your processor could handle the majority of those conditions. That's like in a sense our thought process. If I don't need to condition for something, I'm just not going to send it out just so I can catch everything. I just want the conditions that I need, and I think a broker appreciates that. And that's where we go. We're probably worth a quarter because I saved you maybe an hour or 2 hours up front. Yeah, someone could beat me into an approval. But is it a DULP approval or is it a full underwrite approval? And that's like one of the differences that we feel like the originator brings to the broker.
So we've started 2025 kind of in the same place we ended 2024. Not much movement on rates, still above 7%. I think, looking into the crystal ball a little bit, probably rates stay higher for longer than anyone would really like. How are you keeping your team of account executives focused on that growth mindset while these rates stay stubbornly high?
Yeah, I'm probably not a fit for every AE. But I hold our AEs accountable. We run their metrics. We figure out what it takes an AE to win every day. Like our AE is going to have a count pyramid to know who are the most important originators in their life. How many talk tos are you getting? How many apps and locks are you getting every single day? And then we have a casino report. So you remember Ocean's 11?
Mm-hmm.
Right. And he sits down and he sits down with Julia and they bring him the report and he looks at the casino report right before they eat dinner every single night at the same time. And I'm go, that's what we need. Like I want my originators and AEs to know what does it look like to win each and every day, not for the month or quarter. And then they get lost because there's a lot of account executives lost. And it's just simply because they don't know what it looks like to win every day. So if I see apps and no locks, well, I know they're not converting. If I see all locks and no apps, I knew they're not getting new business. They're just locking the existing business. So I can go to them instantly and go, hey, we need to make a tweak. We need to make a change. Let me hear what you say. How are you connecting to your most important people? Like this is what I think it takes to make an account executive successful. But here's the truth, Diego. There's business out there. If I'm not going to get it, someone else is. Is there a lot of business out there? No, but there's business. People are buying houses. People are looking. Even I sit in South Dakota today. There's no snow. People are looking at houses. Like it's my opportunity to be able to go out and get it. And so the way we teach our originators in South Dakota, I only have originators in South Dakota. We have last month we had 25% market share of the city and we have 23% market share of the state with 17 LOs. It's that same accountability that we teach our LOs, that we teach our AEs. We're never going to be the biggest. I don't want to be. I just want to be the best for the right fit brokers and originators that fit our model. And it's amazing when you find that fit, how loyal we are to them and they are to us. And that's in a sense, that's Windsor's business plan.
I really like that sort of daily dashboard approach. I think that makes a lot of sense. And do you distribute your account executives geographically or by product? How are they organized?
Yeah, I would say maybe I'm weird on that. I'm a little bit geographically for new opportunities or leads to come in, but if they get a referral and a connection and they've done a really good job, it's hard to fight that.
Yeah.
And so if they get a referral, I'm not going to geographically lock them in. I want them to have that opportunity, but I also don't want them to have too many accounts where they can't take care of. So it's a careful balance that we're always looking at. It was like looking at each LO and seeing who sends us business each and every month was probably the biggest lesson I ever learned. And I learned it. I went home frustrated and my wife said it was my fault. She's like, you're not analyzing the data soon enough. You're not knowing the data soon enough. And you can't catch it. Surveying, understanding, connecting. And, an originator takes their phone and they scroll with their finger. And they're like, oh, let's call Diego. Oh, he's safe. He's easy. Oh, let's call this. And so technology for an AE on the front side through Salesforce is just as critical and giving great customer experience as is the LOS and the front side of them to import their documents in and get to closing.
Well, Chris, it has been really interesting to learn about the Windsor Mortgage business and your history in mortgage. Thank you so much for joining me on Powerhouse today.
I appreciate it. Thanks for having me.